Welcome to our first webinar. Brian here from quantlabs.net. Okay, let me just open up a screen here. As I said, I'm not doing any formal presentations. It's a good back and forth. That's how I like to do it. You can imagine. Can you guys see my screen okay? Just give me a yay or an A. Just give me a yay or an A on that. Okay, hang on here. Oh, sorry. I'm just still trying to get used to this. Okay, cool. Okay, thanks, Harold. Okay, so as I said, what we're going to do is I'm just going to break up what I typed up in my Saturday email, and we'll go through point by point. We're going to keep this open for any time you want to jump in, just let me know, and we'll keep this as a informal chat session. It's probably easier. I learned from this, so I do it this way. It's, like I said, it's easier to get this done. Okay, so as I said in the first paragraph, I'm willing to talk about the psyche of trading. The big thing is when I started working on the psyche, on the algorithmic part of the strategy, what I found was my strategy was doing really well. Basically what happened was I put on, let's say, 5 to 10 positions over a 24-hour period, and out of that I might have gotten 3 or 4, maybe 5 that can be winners, and some of the winners were really huge. And what I found was as I was going through the log that tracks all the minute bars, basically you could sense greed kicking in as that P&L, the profit and loss in US dollars, started to go up to like $7-8, and it was pretty exciting to see the potential of it. So at the end of the day, I always thought, what's the number one goal in trading is to eliminate all trading losses, and that's your number one goal, not worrying about profit. Because if you get 10 positions and you get 70% of them are losers and only 3 are winners, and you're trying to get the winners to offset the losers, it sort of puts your trading style at a higher risk, and your P&L as well minimizes the profitability or profit potential on your P&L. So my psyche, or my primary goal in all of this, was to get rid of all losing trades, or at least get a sense of if the trade was going to be a loser. There's a lot of different techniques that I've used to figure that out, but what happened was it got complex very quickly, and I'm up to like 6 parameters in parallel to verify entries. Entries is the pretty easy part. The hard part is the exit that I find. Like I said, hey Andrew, if you want to jump in anytime, Andrew, just say so, and we can. I'll unmute you if you want, as well as Harold, I believe. Yeah,
okay.
Cool. How you
Hello,
doing?
guys.
How you doing, man?
Very well.
Very well. I don't know if you've been watching my videos on this strategy. This is probably my I've worked with a lot of strategies before, but this is my real first serious effort in getting this strategy up and running.
Good.
You weren't part of the earlier part of this call. What I said was, right now on another system, I'm running this strategy. I'm using Duca's copy J4X3, which is the current strategy, or sorry, the current platform. Everything's done in Java, and the strategy's been running been testing it for about 2 months now, maybe 3. What I was saying earlier, it was supposed to be a very simple strategy, but it quickly got complicated as time went on. So I just want to talk about the evolution of it and how I'm going about it, and trying to give lessons to be learned from this. You know what I mean?
Can I ask you, is the program running all the time and looking at markets and then taking its own signals to put on a trade, and then likewise taking signals to take off trades?
Why don't I explain the strategy to you right now? what it is basically it's a strategy that runs overnight. It runs from Sunday night when, remember, I'm Eastern Standard Time, which is New York for everybody, and it'll start Sunday night, and basically it will run till about Friday afternoon, up until a close on Friday afternoons. Now, remember that I'm using Dukas copies, so the servers are based out of Switzerland. So by Friday morning my time, the volume does drop off. So, but there is still an opportunity throughout Friday the day my time. The other thing is that it's purely Forex and Forex only. I have it watch 40 instruments, and they're probably the fastest moving instruments with the highest liquidity and volume. The original concept was to go after only strategies that have the most volatility, but I quickly realized that there's really no opportunity when it comes to these highly volatile currencies, and they're also, these exotics that involve, let's say, the Turkish lira or the Russian ruble. Right now, I'm not able to see a lot of the liquidity there, and everybody says, well, you'll get killed on the spread and the commission and da. So what I found, my initial testing on this with the Dukas copy, with the commission fees and the spreads are fairly tight, and the commission fees are fairly low. When I first started the strategy, what the initial problem was, because of I'm only watching on 1 minute time frames. So I'm not really interested in tick data, because tick data I find is very, very noisy, and so I prefer to work with bars. So I work with different time frames. What I found was that time frames with, let's say, 15-minute or 5-minute, it sort of slowed down my testing process.
Yep.
So right now I'm going to focus on 1 minute, but it is fairly noisy. But there's a lot of noise with that time frame. So I'm not sure if I'm dealing with a lot of what you could call false positives. Like, we can talk about this throughout, like, my notes here that I've got up, and try to hash out what you think or the group might think is a good solution or a good way to follow up with this. Because what I'm finding is, when you talk to a lot of these technical analysis traders, I find that their heads are very poisoned with the way they do things compared to how you do it from a systematic point of view, as well as, involving some simple math techniques. So the first question I had, you can see my screen okay, right, Andrew?
No, I'm looking at a piece of a Google Doc that says, I'm willing to talk about the psyche.
Oh, yeah, no, this is not a, okay, yeah. You can see a highlight. That's actually
yes.
Yes, okay, so that's what I want to ask you, is I'm just going through the logic of my Saturday email. The first question I want to know from anybody that does trading, as I said, that a lot of people are retail traders. A lot of them may develop systems to generate signals, but not even 5 people that I know of out of the probably dozens or even hundreds of people I talked to over the years, maybe up to maximum 5 have actually automatically built out their trading execution. So, I mean, it's easy to have a system that sends out signals, but the hard part is the actual execution to automate that part. So what I'm finding is, I believe that the markets are too random right now. And what I want to ask you or the group, do you believe that you can actually find trading patterns using technical analysis to sort of like determine an exit potential target from your experience?
Yes, I mean, a strategy that I'd have confidence in, at least, proceeding with testing on, would have a rule about what an entry signal was and what an exit signal was. For example, one that I'm working with now has a signal that the deltas of the options that are held would assume certain values. They'll hit a limit and we'll say we're out,
Okay.
And then alternatively, our return has reached X%, for example, 5% on the trade.
Yeah, that's what I'm looking at.
Yeah.
But
and so,
go ahead.
Go ahead. Yeah.
Go ahead, finish up.
Okay, so basically there's an example where I've got two conditions, either of which will trigger an exit from the trade. And any strategy that somebody tells me, I would expect to hear specific rules about exit as well as entry.
That's right. Well, here's the question is because I know like there's a lady out of London. She runs a service called Nick Trading, and it's really more crypto, but it's the same regardless of what type of asset class. So she's using classic technical analysis. So I've got one guy in my Telegram group, and he seems to be, pretty heavy into the technical analysis. So, and I think he's coming around to understanding the mathematical principles that you can use in, calculating your exit. So when I'm saying like that, like when I'm referring to with math, I'm referring to things like linear regression or some form of statistical way of looking at things. Like in my case, I look at momentum, doing either a comparison between negative and positive returns over a subset of a window. So I'm trying to understand where can you get somebody who is really hardcore into technical analysis. Do you think you can get those kind of people to switch over into using the simpler mathematical techniques? I mean, it doesn't have to be complicated like classic quant.
But I think it's the only safe way because the otherwise you're saying you're going to use some kind of decision that's liable to be affected by emotions. And the great thing about automating trading is you set down your rules, you turn it on, and it does trades for you. It takes emotion out of the decision.
Yep. No, I agree. Actually, Harold had a comment. I do not trade FX, but the quote on the equity market has gotten too unreliable to trade real short term, i.e. seconds, so your evaluation of minutes makes sense. Okay. Yeah, so that's coming back to the minute time frame. Yeah, I agree with what you're saying, Andrew, on the simple logic. But somebody said, well, why don't you just apply a stop loss? And yeah, you could do that. But I don't know if you've watched any of my videos, but I've shown two instances where my strategy using Forex, I'm able to, once the position's put on like once the entry's been made, what I do is I'll open up a log and it will log every single minute bar that comes in until it closes out the position. And what I'm finding is, this is where I don't think technical analysis can be 100% reliable, is there's so many random instances. And remember, your system doesn't know what's driving the price, right? But what I'm finding is you could be down, like in my case, $1 or $2, and then all of a sudden within half an hour, you can get this positive momentum where it'll drive up the price to like $6, $8. So if you're using something like a simple, and as in your case, an equivalent of a stop loss or a virtual stop loss, and you get out of the trade at a certain target, I think you're going to lose out on retrieving those big profits. And that's why I have this rolling stop loss where I'm trying to figure out if ATR is still reliable, where you have an instance where a position starts to run and it goes really crazy, but sometimes the ATR does not trigger the exit. And that's I guess you could say, the frustrating part. So what I'm planning to use is to track, as I said, the momentum of the bars, like a subset, maybe 10 bars over 10 minutes, let's say. And as long as that momentum's positive, and I'm also going to track the US dollar P&L, because with the API, you can get on any open position the equivalent of the P&L. And so when I started analyzing it, that was the very first thing I'd always look at is what's the P&L on that position. And I always found that the P&L was like really high, regardless short or long. And then the position would stay on using all these indicators I'm thinking would work. And then I realized when it does trigger the exit during that life cycle of the position, it should have closed it out at this level of a P&L, because that was a maximum P&L, right? And that's what I'm using now. But the problem is you may get an instance where, yes, the P&L will come off a little bit, and then 5 minutes later it'll start to run again. And it's really hard to track that exit potential. So I could do what you suggest with closing it out at a certain percent level, let's say. But as I said, I've had, I don't know, maybe half of my profitable trades have like exceeded monster profit potential. And what I'm finding statistically, if I was to say, here's my system, it's going to put on 100 random trades or entries out of the logic that I use for the entry, and I didn't have a proper exit logic, what typically will happen is about 75% of those trades will not close at a profit.
Now, can you do better manually?
No, because I remember I'm trading. I'm trading on a minute level, as well as I'm watching, and the system's watching 40 instruments. That's the beauty of this, right? The entries are pretty good, but here's what I've also learned from this, is that, you know, when you ask me what's the number one goal in trading, they'll go make money. And I've always believed, and this is a very classic example of this, number one goal in trading is not to lose money. So if you can find a way to, before your system will look at a trading opportunity, that you want it to be able to, if the position looks bad, don't take the trade. So that will prevent a lot of potential losses. And I've been able to eliminate about maybe 2/3 of those type of trades. So what happens is I can have the system have maybe 10 to 20 positions overnight or over a 24-hour period. That's at the beginning. So because I'm using that logic, I'm now able to whittle it down to maybe 5, 6, or 7 positions. And out of that, maybe half of them will be profitable and half of them will be very profitable. But the other thing is it's those 4 other positions that are still unprofitable that will make your day P&L unprofitable. So I'm trying to find ways to eliminate those unprofitable trades before you even put on the position. So that's what I'm after right now. And only when it puts on an entry, it's going to be a guaranteed profitable trade. So I'm always looking for ways to eliminate any potential unprofitable trades. Is what I'm saying, if that makes sense.
Yeah.
Because a lot of traders don't do that, regardless if it's automated or not, because they'll just put on a trade because it meets these certain criteria. But what I found over the last month, that's not the case, because your system will trigger the trading potential, the opportunity, and then it'll put on the position. But when you let those positions run, like I said, like you could have 2/3 or up to 75% of those trades be unprofitable. So I'm more focusing on using the same entry logic, but also have another layer of logic to prevent those negative trades happening. Does that make sense?
Yep.
Yep. So what I use is a simple momentum. And I do that by, as I said, I have 10 bars that my system can track. It can also track through the log. It can also track what let's say it goes into a position. It can track the P&L throughout the trade. And then once it hits a maximum level, it can either go, okay, this is probably the highest you'll hit, so close out the trade, or do it like a trailing stop where you allow the trade to continue. But once it hits, let's say, a certain point of, let's say, using an ATR trailing stop, close the trade, because you're still at a profitable level. That's what I'm thinking. But when I tried that last week, it still failed. You know what I mean?
Yeah.
And these are simple trading indicators I'm using. I'm using simple things like support, resistance, which works pretty good. I'm also using simple moving averages, like a fast and slow moving average, like crosses, which work pretty good. And I'm also using top of book volume as well, like tick data, to sort of measure market direction on that particular Forex pair.
Yep.
So from your experience, moving on to the next question. Like, do you? Let me ask you first question right here. Do you think the markets are more random than ever? That you could use a typical classic, some sort of pattern of some kind, like some kind of technical analysis, or do you just say no? I don't use them because I believe that the markets are only random and it's hard to gauge patterns. Like, what do you believe?
If you're
go ahead,
you're asking me or Harold?
Anybody. If do you believe in the markets are all about random walk theory, basically?
I think that technical analysis is basically a whole subject around the whole subject around the notion that markets are inefficient.
Yeah.
And because of the number of participants, markets are, and particularly because of electronic trading,
yep,
markets are not as inefficient as they used to be. So a lot of technical analysis theorems need to be tested thoroughly before you use them. I mean, for example, I found times when simple moving average trading strategies would make money, and then as soon as you hit a choppy market, you just get killed.
Yeah, well, that's one of my testing conditions, based upon, like I said, using the momentum. So if I'm measuring 10 bars and 5 of those bars are positive and 5 of those bars are positive, that right tells you it's a choppy market condition for that trading period. As a result, don't put on the trade because you don't know which way it's going. And those are hard. Those are hard unless you switch the strategy to something like a mean reverting, then that may work. But this strategy is turning into sort of like a momentum or a trend following kind of strategy. So when you go into a choppy mode or a flatlining mode, what would your strategy, or what should it do?
Well, then if you have what kind of market? Well, first of all, I want to determine what kind of market I'm in.
Okay, well, in this case, we're looking at Forex.
Okay, but is it a market that's become really choppy and is constantly correcting, or is it a market that's going up? Is there clear momentum?
Well, no, that's the thing. I'm finding that the pairs that I'm watching, like as Harold says, he's more random. So when you look at the markets for Forex at a minute level, it's all random. There just doesn't seem to be a set of patterns to work from, unless obviously you slow down your analysis maybe to a 4 hour or maybe a full, like an end of day type of trading. You can do that maybe, but I'm just finding the markets in that realm of Forex it's way too random to really gauge a.
What I would do is I want to test a lot of different technical analysis approaches. Like I test I have a moving average test. I have tests, for example, of each of the various indicators. So I'd be watching what's happening to the MACD and stuff like that. And then, though you can't do these yourself, there isn't enough time. So what you do is you run dummy accounts or dummy trades that you automate. So what I'm doing now, for example, is I would like. Well, what I'm doing now is I'm taking the innovative brokers API and writing up trading programs using Python.
Okay.
And what I'm going to get to is a point where, for example, there's a guy called Carl Dittman who sends out a trading idea every day. He's found a strategy somewhere and he describes it. And it's clear enough, and a lot of it's Forex, that it's clear enough that if you, for example, wrote in MT4 or MT5, you could go in and implement these trades, these strategies, and then start to acquire evidence on, do they work? Are they making profits?
Yeah.
And basically, you winnow from there. You winnow down the ones that you want to keep.
Sure. But
based on results.
In your case, you're saying you're trying options, right?
In my case, right now I'm working in the options market rather than Forex, correct.
And what's your time frame you're looking at for your entries and exits? Like, what's your position holds?
I'm looking at fairly far out from expiration when deltas hit certain values. And I'm using that to put on a what they call a market neutral type of trade. Right. So an example would be an iron condor or a butterfly or something like that. Okay. And then I'm monitoring the situation using my program. First of all, it goes in, looks for the correct conditions. When it finds them, it trades. Then it monitors them, and then it gets out when, as I mentioned earlier, a couple of conditions have to be true. The values of delta, meaning that the stock price, the underlying is moving outside my safe zone, or I've made a certain level of profit and I'm willing to take the position off and go and look for something else. Okay. So I'm just in the process of implementing that, so I can't sort of point to...
No, I understand. But I'm just trying to decipher your logic, though. And what was the name of the broker you mentioned? It was something like Innovative or something?
Yeah, it's Interactive Brokers.
Oh, you're using IB. Okay.
I said Innovative because I was being distracted by my dog. Excuse me.
Oh, your dog's named Innovative. Very good.
It's not her name, but she wants to make sure she gets my attention. So that was why I got distracted. But it's what everybody knows. It's Interactive Brokers.
Yeah. Okay. So if that's the case, here's just some simple questions for anybody in the group. We already got Harold's answer. No, we just got Shalom aboard. Thanks, welcome. And like for you, based upon your testing thus far on the technical analysis front, people said, well, why don't you try using Fibonacci or the Elliott Wave and use an X amount of waves, this happens, and da-da-da. I mean, do you believe in those kind of patterns at all? Or have you tested them and say, yes, they universally work for this asset class?
I've been unconvinced by Elliott Wave because I find that if you take the basic theory and apply it, people who supposedly know Elliott Wave come up with these exceptions. So, oh no, that's not a retraction, that's an extension.
I find that too.
And eventually, it just to me, it seemed to become so arbitrary. And what's more, I couldn't find any case of great success from the strategy. I found people who tried it and abandoned it. So I've concluded that Elliott Wave is over-elaborated, and I can put it aside, at least for now.
What about the Fibonacci retracement?
Fibonacci, I find people are very attached to, and there is something to it.
You do find it has potential to work?
Yeah, because what happens, let's say everybody in the market believes in Fibonacci, then it becomes self-fulfilling.
Right. But I don't want to get caught up in that. I don't want to get caught up in that world.
Yeah.
Because I don't know if you're ever going to look at cryptocurrency. That's my next big one. But all my guys right now, my groups, I got one guy who's up almost 200K from March on an 18K investment. And he says the best way to measure exit that he's using based upon the stuff that I've shown him a few years ago, he says the only thing that seems to work in that world is Fibonacci. So who knows? And I know for me in Forex, maybe Fibonacci may work. I don't know. But again, this is open to anybody on this call that may want to respond on that. But what I'm trying to come away with is I'm just finding that the markets are just way too random to really rely on any of these so-called technical analysis or theoretical technical indicator type of moves. Like I do believe in simple math, like trend line or simple moving average, and that I definitely believe in. But it has to be used universally with other indicators as well. I'm finding, at least in the world at the time frames I'm watching on, and I've had, believe me, man. On Friday I had a monster trade. It was huge, but when I looked at the move on a end of day chart, it was a big move, and that was picked up because my system picked it up using all these simple positions. But the thing is like it's all those other simple little positions I'm trying to eliminate. So I'm trying to find ways to prevent the system from actually taking on those trades. That's what I'm trying to do, and let the system do its thing, and take on the profitable trades. Because when it does get a profitable trade, it's a big trade, and you could probably do just as good as if you were in cryptocurrency. And I know there's potential there. It's just that these little trades are way too many. And have you looked at your system throughout to figure out if you do any kind of measuring or gauging to see you can prevent these unprofitable trades before you even take them on? I guess that's a question. You know what we could do? I've got 7 points here. We can go through each one, and let me know what you think as a group. I'm right now up to six. I've tested 6 indicators, and I got like 2. A guy goes one Charlie Hall and another one like Kalman filters and all this. And I'm finding, as I add more indicators, it just really further complicates the mess. You know what I mean? And
yeah.
I'm figuring, you know what? Is it better just to have maybe 2, 3 indicators that I'm really confident that work, and on the exit, you know what, the one I'm really watching that really works for me in real time, that doesn't lag, and it's just watching the P&L on that open position. And once it hits a certain level, you get out. Harold came back with trailing stop on liquid stock targets or illiquid. Fewer indicators, the better. Yeah, I do. Just so you know, Harold, I've tried the trailing stop, and the different combinations I'm using is just one example of one of the indicators that's so lagging. I had a one position that just dropped, like, I can't remember the percent or how many pips it was, but it was huge in like two bars. And it took the trailing stop. It was just lagging so far behind that the position went out, and it was a profitable trade too. It was a good profitable trade. And that trailing stop wasn't fast enough to be able to trigger that exit when that bar just dropped. And that's the other problem I'm finding with these brokers too, is that when you rely on these brokers, is that they I had guys on my Oanda video make comments like, well, yeah, I did put a stop loss. I'm also using a trailing stop, but as the profit comes closer to the stop loss, the broker will all of a sudden, as a system, will say, "Oh, I'm sorry, we kicked you out of your trade, and you no longer can get the profit as what you should get because it didn't hit the stop loss." So you can't rely on the broker API to trigger these stop losses and trigger stop loss or trailing stops as well. Yeah, and Howard said about e-liquid. I'm right now, all the pairs I could show you are highly liquid pairs. Like, they're from the big 6. You got the yen, the euro, the Swiss franc I'm not having a lot of success with. The yen is my best one. Sometimes the Australian dollar is not bad. And some of the European, like the kroner, the Swedish kroner, and the Norwegian kroner do really, really well. But I'm still somewhat struggling with the euro. And I can do really well with the Hong Kong dollar. But I couldn't imagine using these exotic ones like the ruble and Turkish lira. They're going to actually improve the situation, because to exit the trade, that's one thing, but to fill it, you could lose money because if the broker's not able to fill it fast enough. So you do have to stay with the liquid ones like the big 6. So yeah, I'm finding also, I don't know. Let me ask you this, Andrew. With your system, what platform are you using? You said you're using Python, right?
The Python to write my code, which goes into the Interactive Brokers API. Yeah. I first tested these, and it's a platform I really like for testing is Think or Swim.
Yeah, that's a very good platform now.
Yeah, there's a huge shortcoming of it, and it absolutely baffles me.
What's that?
You cannot use their scripting language for auto trading.
Yeah, it's pretty limited with their scripting. Like, yeah. I've got guys that do this, and they go, well, why don't you just use MetaTrader for this? And I'm going, dude, like, it's single-threaded. And what I was alluding to and wanted to ask you, if you're experiencing the potential problems of Python because it is single threaded. How many assets are you watching at a time in parallel right now?
I'm typically watching each position will have each position will be 2 or 3 trades that are on, and I'll be watching maybe 2 or 3 trades. So the actual volume of things I'm watching is fairly low, very low.
Right, because what I found when I started to ramp up, I started with 12 currency pairs, and my little Mac laptop was able to hack it. But once I went over that, I started getting a lot of multi-threading problems, and I just switched over to more memory on this other system, and I started realizing that I don't know how you code it up. I'm sure you're gonna have the same problem with Python. You're gonna have a lot of are you using like something like pandas as well with data frames?
Not at the moment, no. I mean, right now I'm in the early stages. I do agree that I'm probably going to go that way.
Yeah, because I found I was relying a lot on the internal arrays, like just it was getting crazy, and then the multi-threading was just going crazy. I'd have like 1,000 queuing requests lined up, and it couldn't keep up because I had so many instruments I was watching. And then what I did was I took that trading logic and I replaced it with Redis, and it took out a lot of the unnecessary CPU on the processor and then the strategy code. So it's reduced a lot of the CPU. And what I'm afraid of is when I apply my cryptocurrency one, which is going to be watching a lot more than 40 pairs, it's not going to be able to make it in terms of the demand. Okay, so there's some questions for you, Andrew. One guy, Harold, asked you, are you using Interactive Brokers data or are you using, what's the question here? Yeah, let me just pull it up here. Are you using another data feed?
I'm using IB data.
So Harold also asked, what is Redis? Redis is a open source database that I've been using for the last, I don't know, 5 years, and it's getting better and better. It's an in-memory NoSQL database that I've embedded into my library of my strategy. As part of, because like with Forex, you can only use Java. So all my calls are pushed into the database, and then I can do simple multiple requests from the database, and it takes out a lot of the CPU hairiness that I was seeing with the arrays. And I just don't think any other way can be done. And I'm finding if you do Python as well, you're going to run into the same problems because if you're only watching 10, 15 assets, you're just not going to get the opportunity there. Whereas with mine, like because I went from 12 to 40 plus, the opportunities, I'm able to see more positions, and they're bigger positions when they run too. And they're big positions, not like, $1 or $2. Like I had one on Friday went up to $15. So if I had like 100 quantity on that, I'd be up $150.
Yeah.
And that's just per unit, let alone the actual exchange rate as well. Anyways, we got all those questions. So are you going to? I imagine what you're trying to do is just build a very simple strategy in Python, and then once you get it running, you'll move it into like a better language like Java or C++?
First thing I'll do is assess the performance in Python.
Yeah.
If it is inadequate, then I know C++ better than Java, so my instinct will be to migrate it there.
Okay.
But this isn't a high frequency type of strategy. The key constraint is that it filters the incoming data looking for action on what I'm looking for.
Yeah, I'm just finding for me when I expand the number of assets I watch, I'm able to, as I said, see more opportunity out there, or the system sees more opportunity out there. Harold's got some more questions. Does Redis handle options? It's nothing to do with the asset class. It's an open source database, so it's just handling database. Doesn't matter what it is, and then he asked, use C++ for data and keep trading in Python. You could do that. The problem is when you're a data handler, if it's too slow for Python, it may choke. That was a comment for you, Andrew.
Yeah.
But I don't know if you know, but with C++, you can embed the interpreter into C++ options, but I don't think that'll really make it any different. Actually, it'll probably complicate the problem than really need to be. Do you have any interest to go into cryptocurrency though, Andrew?
Very much so. There's a group of us here who basically are a subset of the sentient beings who are members of the Chartered Market Technician Group. Chartered Market Technician used to be called MTA, Market Technicians.
Yeah, I know them. We got them here in Toronto too. We got two or three chapters here.
They changed their name to match that of the certification they give, CMT.
Right.
We have a group that meets fairly actively here. It's pretty well organized. And the guy in charge is a private fund manager. He has got a subset of us together. We're meeting, for example, I think it's it's on Sunday. And we'll have we'll get together for brunch and we'll talk over things to find sort of things that people have in common. Out of that, it turns out he is very much into cryptocurrencies and has done a lot of research, but he is not a programmer. So there's an obvious synergy there in which I would use what he's found. For example, the option strategy, one of the option strategies I'm testing right now, I can't give you the details of, is his strategy. And it's one of the ones that I'm writing in Python. And what he wants to do is he's sitting by his computer every day, watching the markets, manually putting trades on and taking them off, and he wants to automate that very sensibly, so he can work on other things. So that's one of the first things, one of the first uses of this automation that we'll get.
Right.
And then the other thing he's done is he's researched these cryptocurrencies, and he agrees that Bitcoin is just crazy, and there's all kinds of liquidity issues.
Yeah.
So he's done some research, and one he likes, which I've got to still research myself, but I can tell you the name of it. It's called Tron.
Yeah.
And it's there's a very arcane process for buying and selling it, but he is, it's basically priced like a penny stock.
Imagine.
Right.
And he's seen sort of, in a case of 2 or 3 months, he's seen increases of 100%. So if those are real, then it's really
they're real. We'll do a private one after this call or whenever you want, and talk to you about my development, what the kind of group that I've got. I've got 2 guys in my group that, like I said, I got one guy's up 190 since May last year, and he's done very well for himself with it. And I got another guy. Do you remember the guy we used to have, London Quant?
Yeah.
Remember him, but this other guy's on the same level, but he's just as generous, much generous, and he's really good to our group, and he knows his stuff, and he focuses a lot on crypto, and he's a C++ guy, and he's a Linux guy, So yeah, we'll talk after if you want.
Cool.
Tron went crazy due to McAfee tweets, I think. Can I just want to sidetrack this for a little bit. What I'm finding with the crypto stuff, we got a guy who runs a couple of Telegram chat groups, and he invited me to a couple of them. I just found them very noisy, just a lot of chatter. And then another guy hooked me up with a lady named hang on, I think it's Nick Trades or Nick Trading. I just put it in the chat box, and she does a webinar live on Facebook, London time, 9 p.m. on Monday night. She just had it a little while ago, and it's huge. She's got over 1,000 people that watch this, and she's an experienced trader. And what she does, she'll go over a slew of each of the coins, and she'll do a technical analysis snapshot, and she'll say, well, this is how I feel if it's going to go up or down, and here's the target levels, and da-da-da. And it's pretty cool. But what I'm finding with these type of trades or trading and this chat stuff is it's all fine and good, but it's just all speculation. And I always joke on the group. I always say, you know, guys, this is like penny stock trading, because you don't know who's pumping the stuff. You don't know who's what, because you can have a coin, and then it might be attached to another exchange. We had one guy was pumping up Bitcoin somehow, and it was a big crypto. And what it turned out is that when Bitcoin went up, so did this coin, and there's a whole group trying to pump that coin. And I got another bunch of guys on my Facebook group. About three of them, they do all these fake posts trying to get people all excited on this other cryptocurrency coin, and it's like,
yeah,
there's just so much stuff out there that you don't know what to trust. But at the end of the day, yeah, like Moru says, it's nonsense. The market is clearly manipulated, crazy. Agree. But here's the thing: is that I don't know if you guys have been watching my put up 2 videos on trading bots for cryptocurrency, and I just did one about a month ago on different bot projects out there you can get on GitHub, like open source. And the one project I really like that you may want is, I'll put in the name, called CCXT. It's in Python. It's very powerful, and it gives you access to over 90 exchanges. Doesn't matter if they're manipulated or legit or what. It's a wrapper to all these exchanges. So it's like one API to all the exchanges. It's a very, very powerful. I'm going to make a note of that, Maru. Yeah, I've heard of that Gunbot. Hang on here. I'll give a comment on that. But CCXT gives you, it's a wrapper to all the 90 plus exchanges, and if you know how to write a scanner that watches, and I didn't want to put this on YouTube, because for every like I get somebody hating my comment or something. But I didn't put this up on YouTube. But I've been using this Excel product called, it's an Excel add-in called XLQ, and they just added an API connection into Coin Market Cap. So when you use this, you can easily use it as a scanner across all the different exchanges, and figure out what is the typical, what is the fast moving currency, and add it as a trigger into your system, and start doing some another analysis on the fly to see if you want to take that trade on, and then you can have it go into whatever exchange of your choosing through the CCXT. It's powerful. The ideas I'm coming up with, but I'm going to verify this with this guy. I'm calling him LQ2, and he likes the idea. Moru says he's a Oracle SQL program, so we'll learn Python. Yeah, I think Python. Well, I remember. Why don't you comment, Andrew? Because I know you did R for a while, and here you are in Python.
Yeah, basically, Python's one of the supported language with interactive brokers, and R is not. R is my preferred environment for doing anything statistical. For example, if I get a data feed on a stock,
yep,
I want to do statistical work with it. R, first of all, it's a vector-based language, so it's much more purpose-built for statistics.
Yeah.
Second, it has high-level routines that make, for example, a 2-stage regression, one line of code. And you basically all the things you got in pandas like data frames are in R as native objects, and you can you basically you just put your data into a form that you know, and then doing it makes statistics unhealthily easy.
Yeah. Yeah, I mean, Harold says love R, but not sure about threading aspects. I agree with that totally.
Yeah.
Just so you know, my strategy live right now just picked up a trading opportunity. We're watching it right now. 1 minute chart, British pound and the yen. Now there's a demo account. You can see the rise there a little bit. It was bouncing around about a minute ago. It was making a little bit of money, but right now the P&L is at negative 20 cents, so it is dipping. but something tells me this could be another trade, so we can watch it.
I cannot see it. All I can see is your document.
I'm sorry about that. Let me. I have to share the screen. Just give me a second here. Just say yes or no if you see it. Can you see it now?
Yeah.
Okay. So this is we'll watch this live and see what happens. Because it is about the trading. And we got Edwall on board. And we got some other new people. Bing, Dave, got lots of people. Cool. Welcome, guys. So yeah, I think you're right about R versus Python, but what I'm finding, it really comes down to two things. What's your asset class that you're watching, and how many instruments that you're going to want to watch as well. And what I'm finding, the more I look at it, the more I play with it, you either want to be in the Java or C++ world. And from what I'm seeing, because let's say with you, Andrew, you're in interactive brokers, you got both choices right there with the Java and C++. I think it's good for research with Python, for just doing quick and dirty trading ideas and just seeing how things fly. But I wouldn't be surprised at some point you may need to move into either C++ or Java for the multi-threading. I don't know, it's just my opinion. So we're watching this little guy right here. Let me go back to my little set of points that we were originally going to talk about. We can always check on this position here. Okay, hang on here. I'm just going to go back to my document. Okay, so we've talked about, so Maru, I think there is a pro version where memory and threading is increased. It may be, but your threading may not be increased enough. That's what I'm finding. I mean, I got a guy out of Germany who knows the guys at Duca's Copy, and he's heavily plugged in with them. And I saw him last month, and I asked him point blank, I go, so what's your view of Forex? And he looked down at the floor, and he just started shaking his head. So it is critical, I think, not to rely on these platforms, because I'm using the API and embedding my trading strategy right in the platform, and I'm running into all kinds of wonky things. Okay, so as I said, we talked about indicators, minimize the number. We want to keep it simple as possible. So here's a big one is what I've done, and I want to get whoever's view on this, is like I said earlier, what my system does, because I have the control, I'm able to log, once a position is put on, I'm able to log it. And because I'm watching on a minute-by-minute basis, I'm able to watch those bars. And what I'm finding time and time again is that because I have the API call to track the P&L, the profit and loss in US dollars, I'm able to track that in real time as the entries put on and as I call it, the position evolves as part of the life cycle of that position. And I'm finding time and time again, usually if I have a position that closes out, at some point it was profitable, and that was very profitable. But at the end of the day, those triggers, those rules still close it out at a loss. And that's why I'm saying, okay, you know what, I'm just going to watch the P&L and only use the P&L as part of my exit factor. Now, I know a lot of the APIs out there don't enable you to have access to P&L in US dollar. So obviously you can use in percentage. Now, one thing that one of my guys said is that when your position opens up, like what we got right now, this position did open up with the pound and the yen. It did open up negative, and it's still negative right now. But looking at the momentum, if I could, I can go back to that. This is just as example live. If I go back, just let me know if you can see my Forex again, the platform. Can you see that, Andrew?
Yep.
Okay, so let's say if I apply some indicators. Now, one of the indicators I use is minimum and max. So let me just see if I can add those indicators. So one of the indicators that I use is called min-max. It's sort of like an easier way to program basically support and resistance. Actually, I find this is better because it doesn't lag. It's more real time, but you can see there on that position that just opened up, it is it is kind of like hovering there on the upper maximum range, and that's good, but it's come off. So the question is, do I take off that position here, or do I let the position run? And these are the situations I'm always challenged with time and time again. At what point do I take on the trade? Do I cut the trade? Do I let it run? And this is just an example of me, pointing out what I just said in that document. So here, it's kind of fighting its way to being profitable right there, as you can see. But again, you can use SMAs for that to confirm direction, or you can use, if you have access to the top of book on the volume on your bid and ask, which is really a nice measurement to have to see if this position will go profitable or will become profitable. It's just one example, right? And this is a great example live to show that. Let me go back to my Word document here, my Office document. So this is just one example. So I just showed you an example of min-max on the shorting or longing. I'm finding it's really good to use, and it seems to work pretty good. Another lesson here is when you take on a position, you'll have your position, you're not sure if it goes against you. You don't know the direction or the momentum of that position. Typically, you want to cut the trade if it goes below, let's say, roughly 10%, because all the experienced traders that remain profitable in the game will cut the trade around 7 or 8% if it's losing 7 or 8%. So here's an example. It's approaching back its maximum. So the question is, do you hang on to that trade and let it run and see if it will break through that maximum? Right now, I'm seeing on my other system, the P&L right now is 13 cents. So it is profitable. Now, I can let it run and see what happens and let some other indicators kick in. So I guess let me ask you the question, what should I do with this type of position? Over to you. Anybody got any ideas? This is a very typical scenario that I will see with this system. Right now I'm at 23 cents. Should I cut the trade or should I let it run? Now it's down to 16, 19, 14 cents profitable. What do you think I should do, Andrew?
Cut.
Okay. Yeah, I could have done that.
For me to be long or short, to be in a trade, it has to be compelling, and this isn't.
Right. Well, this is an entry that my system was triggered, and it took on this entry.
Okay.
But here's a comment from Harold. Manual trading, I would move a stop below the last bottom. And when you say bottom, are you referring to the minimum or to the actual bottom of the price action there? Of, let's say, the level of right here at 152.8075, let's say, if that's what Harold's referring to. So you would cut the trade, eh, Harold or Andrew, right off the bat once it goes profitable?
Yeah.
Because I've seen instances where this starts to take off, but it's there's a bit of momentum. Now remember, this is 1 minute. You wouldn't see this if it was a 5-minute chart or even a 15-minute chart. But it's just bouncing around there and going back in a choppy mode.
Yeah, don't place too much state on what I recommend because I'm not familiar with the strategy you're using.
No, I know. But this is just one of the things. I'm just trying to, it's good that we're getting to play with this example live. So this is good. Okay, let me go back to the document here. Okay, so we talked about that, minimum, maximum. Okay, we did talk about hardware. Let me ask you guys. Okay, thanks, Harold, on that 152. The question then becomes, with what we talked about earlier about hardware on the number of instruments you watch, how many positions or how many assets do you think you'll be watching realistically, Andrew, on your system, do you think?
It would typically be, the assets in this case will be different options contracts.
Yeah, I know.
So I would say at the most a couple of dozen right now. And I would cap, one of the things I have is I have an account.
Yeah.
Then I have maximum position size, which is a percentage of the total account. So that if one of them goes south on me and I lose my investment, and my investment is capped for each trade, that it is the most I can lose, then it's only like 5% of my total trading capital.
Okay. Question for Andrew. How do you find option trade without looking at all?
Don't understand the question. I'm always looking.
No, I think what he's. I guess the better question is: are you scanning a set of options, like a subset of options, or I guess that's what he's trying to ask. He says all of the options.
Okay, I'm picking a specific. So I'm in the S&P 500, either in the probably the SPX actually.
Okay.
And I'm looking at that. I'm looking at the tables, the option tables, for trades that have the appropriate delta.
Okay. Okay.
My entry signal.
So you're manually doing that part? He's asking.
No, that's the whole point. I want to automate the whole process.
Yeah.
So I will go and in the idiom play golf, and the program will be running, and it'll find trades for me, put them on, take them off. Some will be on for a few hours, others will be on for maybe a couple of weeks. As basically the trade makes money through theta decay.
Right.
So if it's successful, it could be on 2 weeks and maybe earns 5%.
Yeah. Okay. So I guess my next point is in my case, I'm watching on a frame of 1 minute. Would you say that there's probably more opportunity once you can minimize your potential losses? And obviously, there's going to be a lot of false positives and other fake noise in there. Do you think watching on a 1 minute level or time frame is wise based upon what I'm showing you guys?
Yeah.
Okay. All right.
I want to be with a trade like yours. Looks to me like you want to be on as finely granular a time frame as possible.
Yeah. Outside a tick.
Yeah.
Okay. So next question is with this, because now we're going to talk about the targets that you would set, Andrew. So if you allow for the monster profit, as I said, I've seen if you hold on a position like longer than you anticipate. In my case, I let it run overnight, and I woke up with it was up $15, which is very large. And I've also gone through that log I was telling you about, where you see those profit levels getting much higher. How would you deal with something like? Would you apply, let's say, a hard stop to it, or would you apply just some kind of percent level, or would you find other ways to apply trading logic where you can allow that trading part to run?
I like adjusted stops.
Okay.
So, for example, looking at the variance of the underlying price movement, I might pick, say, 2 standard deviations.
Yep.
And then put a stop there.
Yep.
And then adjust it in response to the market price, at certain increments.
Now, when you say you put on a stop, are you letting the broker know, or are you doing it virtually?
I'll be doing that virtually.
Okay.
Yeah.
Last point or question. Now, I don't know. You said you're just starting out on these trading ideas, right, Andrew?
Actually, I'm sorry. Yeah, no, I would put the stop actually on at the brokers. Yeah, so I'm not simply watching the level in my software remotely. I'd actually put the stop on
with the broker. Okay.
Yeah.
Okay. Now I know with interactive brokers, I mean, would you prefer to put on a trailing stop loss as opposed to a hard stop loss?
A trailing, yes. A trailing stop loss makes theoretical sense to me more than a hard stop loss. And I mean, a hard stop loss really is just the first level of the trailing stop loss. I mean, for
Yeah.
example, if I gave you a trade and I said, I'm going to put on a stop loss as well, it's going to be 2 standard deviations below the execution price of the trade. Then let's say I'm in a long position and the price doubles. Do I really want to leave that stop where it is? Is that the best position for my stop? 2 standard deviations below the entry price?
Yeah.
I bet it's not.
Okay. I mean, the way you're explaining this, your strategy, it obviously can universally be applied to a lot of asset classes because it's a very simple pricing action strategy. I mean, you're just setting target levels and letting it adjust as a price action takes hold. If it's let's say a hard stop loss on the downside, but you let it roll on the upside, right? Like a trailing stop.
Yeah.
Okay, but you could easily apply this to other asset classes that your broker supports, right?
Yeah, this kind of like safety first stuff is multi-market, multi-asset.
Yeah.
Theory.
Yeah.
Really.
Right. Okay. One last question here. Like I said, I've been working on this for a couple of months, but this is my first real effort to get this rolling. I'm not sure if you can answer this, Andrew, but have people found that you'll have maybe 3? I'm on my 4th version of this strategy where I just kind of scrap the code and start again because you add in your code and you debug it, it just gets more and more bloated. Is anyone finding that that's what they have to end up doing? Basically, scrapping the current code and doing it again, but in a much more streamlined part of way of coding and recoding your strategy. Anyone experience that? I guess not.
What I do is I use source control, so I'm keeping my older versions. Once I've got the thing working, I then become really strict about pruning the code to get it down to be as compact and as logically arranged and as efficient as possible. So I will, I'll actually put comments in at each section. And for example, I've got a loop that's constantly being run, and it'll be looking for seeing, first of all, am I in a position? If I am, it goes to execute some code that's applicable when I'm in a position. Right. If I'm not in a position, it's going to go and search for trades. Okay. So basically, it's making those 2 decisions. It's executing the classic kind of programming decision tree, and I'm writing the code so that it reflects the domain that it's coded for.
Right. Harold came back with another interesting question. Be careful not to just become a coder. Got to find a system that can trade and make money. I'm not sure if you're referring to a black box type of system or bot. I find that when you do that, you may find your strategy may work for a little while, but I don't know how much you'd be willing to spend on it. But personally, I find I get more value doing the process I'm going through to see how, why my strategy may take on this or this logic may put on that entry. And as I log the bars as they come in while the position's open, I find it, out of anything I've learned in this whole realm of automated trading and math and computer science, is that I'm able to see and why that those moves are happening. And I don't think you'd be able to get that with a black box. Point is, code does not have to be perfect in having to start over and over. Oh, I see what you're saying. Yes and no, because I've experienced where I put in code, and as an example, this Redis thing I was mentioning, if I didn't do that, I would have had a strategy that would have just gone into a haywire mode and would eventually crash. But because I moved the logic, or a lot of the logic and the components that maintain state, the data, meaning, and move it into a database, a high-speed database. It takes away a lot of that extra processing on my system, and it takes away a lot of that thrashing that takes place within the platform, which can make the platform a lot more inefficient. So I'm finding the coding, the different iterations of the coding really helps. But where it's really helpful is the debugging process I'm finding. He says he agrees if you're doing it to make those kind of changes. I guess so. Yeah, so those are my lessons I wanted to put together and just say these are the experiences I'm having, and just wanted to hash it out with anybody that may experience the same thing. Is there anything else you want to throw in there, Andrew?
No, I have to run to dinner in a minute, so it's 7:15 here. So
all right, well,
this has been very, very useful.
Yeah, thanks. I'll do another one next Monday if you're around, and I'll reach out to you and let you know about this crypto stuff.
Yeah, please do.
Oh, Harold wants to know how he's able to talk with you privately, if that's possible. Do you want to get back in touch with Harold? Why don't you email me at feedback@quantlabs.net, and I'll see what I can arrange for you. Is that fair? Yeah, he says it's okay. Great talk and session. Thank you. No problem, Maru. So I can do this again next Monday if you want to continue the conversation, because we haven't talked about things like position sizing and the portfolio analysis, because my strategy right now just does one minimum unit, and that's it. What I'm focusing on right now is the trading logic. And I think you also have, when it comes to at least Forex, you have to factor in leverage, and you have to factor in your position sizing based upon your portfolio risk and your portfolio or your strategy, your portfolio performance as well. So that's another big world that I got to delve into in the coming weeks, I guess. So if you want to be part of that, that'd be awesome. So anybody else outside? I know you said, Andrew, you don't want to add anything, but anybody else want to add anything or a comment, question at all? But I'll get in touch with you, Andrew, about this crypto stuff.
Yeah, awesome.
It's right. very, very profitable.
Yes, we need to talk.
I've got guys that say, you know, they have to, from their employer standpoint, have to, you know, focus on these type of asset classes like the futures and whatnot. But once they move into crypto, they're making serious money. I mean, that's where the real profit is. So we'll get in touch if you're interested.
Yes.
And Harold, get in touch with me via email. Here, I'll type in my email. Pretty simple. And that's it. If you want, anybody else got any questions or concerns, can you just get in touch with me or speak out now. Otherwise, we'll wrap her up.
Cool.
Cool, man. I appreciate you participating, Andrew and Harold and everybody else, Maru and all that. Yeah. So
it's fun.
Yeah, it's all good, man. I'll put this up tonight on YouTube.
Bye.
Okay, cool. All right, thanks, guys, and we'll talk to you soon. Okay, bye. Have a good night or day. Later. Bye.